Hey everyone, it's Julie here with TipRanks, and today we're taking a look at some of the best high-yield dividend stocks. So let's get into it. Alright guys, as always, welcome back. Thank you all so much for being here. Today we're taking a look at a few high-yield dividend stocks that not only have a strong buy consensus from Wall Street, but they also score an outperform rating on the TipRanks Smart Score. We're going to look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found these companies today over on the TipRanks Dividend Center. Found under the dividend menu, we're headed to best high-yield dividend stocks, where we'll find dividend companies with a yield of over 5% and an outperform rating on the TipRanks Smart Score. I then sorted by analyst consensus to narrow in on some strong buys. And just before we get into today's dividend stocks, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our best high-yield dividend stocks. First up, we're taking a look at Enterprise Product Partners. They trade under the ticker EPD, currently priced at $29.37. We have covered this one before, the most recent time being back in May. Over the past year, they have gained 17%, and in the last 3 months are up 5.5%. Enterprise Product Partners is a North American midstream energy company. They move crude oil, natural gas, and natural gas liquids from production fields across the U.S. to storage and terminal facilities on the Gulf Coast. They control pipeline assets that total more than 50,000 miles and stretch across several regions. They're one of North America's largest midstream firms with a nearly $64 billion market cap and almost $50 billion in revenue during 2023. EPD has been increasing their dividend distribution for 26 consecutive years. And their current quarterly dividend comes in at 52 cents per share for a dividend yield of 7.13%, well ahead their sector average of 3.75%. The company is a public partnership, so worth noting that they do issue a K-1 come tax time. They shared their Q2 earnings report back on July 30th, and the company did miss on both earnings and revenue, though they did see some big year-over-year growth. For their second quarter, they reported earnings per share of 64 cents, which did fall 2 cents short of estimates, but did grow over 12% year over year. Revenue came in at $13.48 billion, missing by $790 million, but increasing over 26% year over year. They did repurchase approximately $40 million of their common units during the quarter. Following that quarterly report, we did have one analyst from Truist Financial who increased their price target on the stock. They said the company reported a relatively as-expected Q2, as many estimates assumed slightly less seasonality last quarter than normal. The results did not disappoint given the record natural gas processing and natural gas liquid pipeline and fractional volumes. EPD is rated a strong buy based on 11 current analyst ratings with 9 buys and 2 holds. The average price target comes in at $33.70, implying an upside of over 14%. Looking at those ratings down below, on the low end we do have a hold here with an upside of 2%, while our high-end price target is $37 from Truist with an upside of 25%. For our second high-yield dividend stock, we're taking a look at Rithm Capital. Trading under the ticker RITM, it's currently priced at $11.53. Over the past year, it's gained 27%, and this is another one we talked about most recently back in July. In the last 3 months, it's gained 4.7%. Rithm Capital is a REIT, or real estate investment trust, and they invest in a wide range of assets. This includes residential mortgage loans, consumer loans, business purpose loans, and mortgage servicing rights. In addition, the company also invests directly in commercial real estate and in single-family rental homes. Together, this all adds up to a highly diverse portfolio with $42 billion in assets and over $7 billion in total equity. As a REIT, Rithm Capital is required to pay out so much of their income as distributions. Since their inception, they've paid out $5.3 billion in dividends to shareholders. Their current quarterly dividend is 25 cents per share for a dividend yield of 8.62%. And they also shared their Q2 earnings report back on July 30th. They came out with both an earnings and revenue beat. They reported second quarter earnings per share of 47 cents, beating estimates by 5 cents per share, and revenue of $1.23 billion, beat by $110 million. And just a couple of weeks ago, Rithm Capital was added to the Best Ideas list at Wedbush. The firm believes that Rithm Capital offers a unique business model that is unlike any of its mortgage REIT peers, which should warrant a differing view on its valuation. Its new res business, which represents about 45% of the company's adjusted book value, is currently one of the largest mortgage platforms in the country. The firm believes that a more appropriate comp group for the segment of the business would be other servicing-oriented mortgage companies, which trade at relative price-to-book premiums. With 6 current analyst ratings, Rithm Capital comes in as a unanimous strong buy. The average price target of $13 implies an upside potential of 12.8%. Looking at those ratings down below, on the low end we have a few here at $12.50 for an upside of 8.5%, while our high-end price target is $14 for an upside of 21.5%. If you've made it to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Our third high-yield dividend stock is RITM Capital Corporation. Trading under the ticker ARCC, they're currently priced just above $20 per share. This is another one we've talked about before when it comes to high-yield stocks. I think most recently was back in November here. In the past year, they did gain 15%. In the last 3 months, though, fairly flat, down slightly at 0.6%. RITM Capital is a BDC, or business development company. They are a specialty lender providing credit and financing services for small and mid-market businesses that wouldn't necessarily qualify from services from a traditional bank. Since going public in 2004, ARC has invested over $21 billion in 475 companies. With a market cap exceeding $13 billion, they are one of the largest publicly traded BDCs in the U.S. with a well-diversified and well-balanced portfolio. They've been paying out a dividend since 2004. Their current quarterly dividend is 48 cents per share, giving us the highest dividend yield of the bunch today at 9.35%. Once again, we have another company that reported their Q2 earnings on July 30th, and they did come out with an earnings and revenue beat. Their Q2 earnings per share of 61 cents beat estimates by 3 cents per share, and revenue of $755 million beat by nearly $40 million. And around the time of that earnings report, we did hear from a 5-star analyst at JMP Securities. They said that underlying trends in the period for business development companies were broadly consistent with the last several quarters as capital markets slowly recover from the trial levels experienced the last 2 years. The firm continues to like RITM Capital. The company is rated a strong buy based on 8 current analyst ratings with 6 buys and 2 holds.
In progress.
And the average price target comes in at $22, implying an upside of about 6.8% from current prices. Looking at some of those ratings down below, fairly closely grouped together, our low-end price target is a hold here with an upside of 1.6%, while our high-end price target comes in at $23. So that is a look at some top high-yield dividend stocks. Let me know your thoughts on these 3 companies in the comments down below, and what other dividend stocks have you excited lately. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always sticking to your own investment plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.